Hey everyone, welcome back to Corporate Decoder. Today we're diving into the shareholder report of Morningstar Funds Trust. And let me tell you, it's less about cozy chats around the water cooler and more about sifting through numbers that could make your head spin. But don't worry, we're here to demystify it together. This report is key for anyone using Morningstar's funds because it outlines how the funds performed, what shifts they made, and what's been going on behind the scenes. So let's jump in. If you appreciate someone doing the hard work for you, hit that like button and subscribe. Speaking of demystified insights, we have a Discord community linked in the description below. Jump in there and ask any question around corporate document. First up, it's the reports to the stockholders. This is where Morningstar gives a high-level overview of how each of their funds is doing. Each fund provides its own description, all of which are part of this filing. Let's get straight to the good stuff. Management's take on how the funds performed. We're talking about the Morningstar US Equity Fund first. It returned 8.48% for the year, but here's the kicker. It underperformed its benchmark, the Morningstar US Market Index, which did even better at 11.51%. That means their fund didn't quite keep up with the overall market, a key detail to remember. What went well? Their bets in midstream energy and US bank stocks paid off. Also, being overweight to the utilities sector helped. It wasn't all good news, detractors. Betting on small and mid-cap stocks didn't work out, and being underweight in information technology hurt. The top holdings are mostly common stocks, investment companies, and short-term investments. Okay, the International Equity Fund is next. It earned 9.31%, also trailing its benchmark, which did 11.03%. A dedicated position in Chinese internet companies did well, and favorable stock picks in healthcare helped boost the numbers. What hurt the results? First, a dedicated position in global energy stocks lost value, and being underweight to the financial sectors hurt the returns. Okay, so how did the Global Income Fund do? It gained 9.58%, also underperforming its benchmark. Seems to be an overall pattern, the good. An overweight position to international dividend equities helped them. For the opposite side, short-term treasury holdings hurt the relative results. Let's head over to the bond side with the Total Return Bond Fund, and they brought in 7.53%. They underperformed their benchmark, the Bloomberg US Agricar Bond Index, which got 8 point. In contrast, their short-term treasury holdings hurt their benchmark relative results. Their municipal bond fund, though, a return of 2.06%, narrowly underperforming its benchmark, which was narrowly at 2.21%. For this fund, the short-duration municipal bonds outperformed the benchmark as shorter-duration municipal bonds outperformed during the period. The detractors, the fund did not take full advantage of a rally in high-yield municipal bonds. Now, onto the defensive bond fund, and they made a 7.41% return. But things are somewhat different. This time around, the fund outperformed its benchmark, which only got 6.76%. How? Overweighting mortgage-backed and commercial mortgage-backed securities helped. Their short-term treasury position hurt their relative results. Basically, the fund did better than expected. A bit of a black sheep compared to the others so far. Now, onto the Morningstar Multi-Sector Bond Fund. Returns here are 8.84%, slightly underperforming its benchmark, which returned 8.99%. An exposure to high-yield bonds and exposure to non-US currencies boosted their results, while benchmark relative results were hurt by their position in hard currency emerging market debt. As for the Global Opportunistic Equity Fund, the total return here are 10.22%, underperforming its benchmark. The Morningstar Global Markets NR Index, which got 11.3%, an overweight position to Chinese internet companies and US banks were a tailwind, while the fund's position in US small cap companies were a headwind. Lastly, the Morningstar Alternatives Fund, and it comes with a quirky alternative strategy. The returns here are 7.85%, outperforming its benchmark, the Morningstar US Cash T-Bill TR USD Index, which returned 4.97%. Their convertible arbitrage and systematic multi-strategy moves paid off in the period. Exposure to a long-short equity strategy weighed on relative performance. Jumping to item 2, there weren't any changes or waivers in their code of ethics. Seems like everyone is playing by the book, or at least no one's bending the rules enough to report. Item 3, the Board of Trustees has those financial experts on the audit committee. We learned that Barry P., Benjamin and Teresa Hamaker are the experts and are deemed independent. This is about having qualified people keeping an eye on the financials. Item 4, this is about the money paid to the auditors. $340,000 in audit fees, $50,500 in tax fees. It also notes that Ernst & Young LLP resigned and therefore ceased to serve as the independent registered public accounting firm. Cohen and Company Limited was hired, no particular worries here, but it's something to note. We see the schedule of investments in securities of unaffiliated issuers is included in the financial statements. Basically, they're telling us where they're putting their money. It would honestly take way too long to go over this part, although this is often the most important and time costly to do. Lastly, we have some tax information. It turns out that a percentage of the dividends distributed during the year qualifies for the dividends received deduction for corporate shareholders. QDI, qualified divided income, is also shared for some of the fund. We have that Deloitte and AMP, Tushar was hired recently, approved Cohen and AMP Company Limited, SEC Victor Fist, to serve as the new independent registered public accounting firm for all funds in the trust this fiscal year. Now, looking at the trust as a whole, it's clear we're dealing with a mixed bag. Some funds performed well, some not so much, and there's a lot of activity under the hood with frequent portfolio adjustments. The shift in accountants is notable and might be worth keeping an eye on. For what is worth the trust's overall direction, diversification and flexibility. Seems clear, especially for the alternative fund. A major risk? Underperformance is always a risk, and several of these funds didn't beat their benchmarks. Also, with complex financial instruments, things can get murky quickly. Okay, that's our breakdown of Morningstar Funds Trust's latest filling. What are your thoughts, folks? Drop your thoughts in the comment. If this analysis helps make smarter decisions, make sure to hit that like button. It really lets me know if there is value in the video, and subscribe for more deep dives. Don't forget to check out the Discord in the description.